Hi guys, in this video I would like to teach you guys about the market structure. When we define market structure, there are actual three basic ways of knowing the market structure. Number one is we define the market in the way it is moving, and that is like the uptrend, downtrend, and a consolidation. An uptrend is when the market is making a series of higher highs and higher lows. A downtrend is when the market is making series of lower highs and lower lows. And a consolidation, or maybe let me say a market in a range, is a market where the market is bouncing between a triangle. It goes up, comes down within that triangle. So a support is created down and a resistance is created up. So I would like to show you guys on this chart what an uptrend looks like. Here, when you look at this is basically an uptrend on Euro USD daily chart. And one thing I just want you guys to note down is when the market is in an uptrend, don't try to sell it. There is a belief in forex that don't go against the big money. The big money define the direction and we trade in their direction. When the market is in an uptrend, we only look for buying opportunities. We don't look for selling opportunities. The selling opportunities that happen are just there because the other traders, hedge funds, and other big money that are taking some little profits and also making the market to come lower so that they attract more buyers. They're not doing it necessarily because they're changing the direction. So that is one thing I just want you guys to note. The second one is when the market is in a downtrend, you only look for selling opportunities. And you don't sell anywhere on the chart. You sell at some psychological levels. That is like support, resistance, the start of a new lower low, higher low, and the same to an uptrend. You buy at the beginning of a new higher low. Yeah. So I would like just to draw something just to illustrate. This is not how it is supposed to be, but it's just an illustration. So an uptrend looks like this. This is the first, and then a retracement, the moves here, a retracement, the moves, a retracement, and it moves, a retracement. It is continuing up. So you can see here is the first higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher low, higher high. One thing you can mark is don't mind the drawing. This is how I'm drawing by hand, so you can. The concept is the most important. So an uptrend looks like this: a series of higher highs and higher lows. So what do you do is, if you are looking for selling opportunities here, if you are looking for buying opportunities, you can either buy here, or buy here, or buy here, or buy here, or here. Like this Euro USD, I bought it early in the morning today and paid some little money. I wasn't at home, so I wasn't there to watch the trade, so I exited the trade a little bit early. So you can see that is an uptrend. You mark it like this, mark it like this. That is how a basic uptrend looks like. The same to a downtrend, we have Euro USD that was in a downtrend for a very long time. It was here. That is the first higher low. They made another. There was a higher low here, up there. Then the market made a retracement. Came back here. It went back. Came here. Came here. Like this. So what happens is this is the first higher low, higher low, lower low, lower low, lower low, lower low, lower high, and lower high. So this is a downtrend. So you can only look for selling opportunities in this market, and you can either sell here or you can sell here or maybe here. So that is basically how it looks like. That is on a daily chart. Maybe you can bring it down to a lower, and I think it looks better on a lower time frame. Yeah, on the lower time frame it looks better. You can have, here was the first higher high, higher low, higher high, higher low, higher high, higher low. Let me compress it like this. I think it will look better now. Yeah, like this. So that is basically how it looks like. That is in an uptrend. This is just a basic market structure lesson. I believe we can have a more comprehensive one when we have a live video where you can ask questions and I can answer your questions. And you can see how I view the market and what I look for in the market. When you're doing this and doing something like this, the most important thing you have to keep in mind is that the market moves in a series of a higher high, higher lows, higher high, higher lows. That is in an uptrend. In a downtrend, it moves in a series of lower highs and lower lows, lower highs, lower lows. So that is something that I just want you guys to note, and also note that the market is always right. If the market is in an uptrend, please and please don't try to sell in that market. Don't try to sell there. Because if you sell, you are moving against the big money and you don't have enough money to move the market yourself. So we just have to follow the trend, go in with the big boys, follow their direction. If they are going up, we follow them. If the market is retracing, we wait. And that is actually going to be in the next video. I just want you guys to note something in the next video about Fibonacci retracements, and I will also teach you about support and resistance, which is one of the most important in the market. But just note, this is not all. There is too much I can teach you, but the video can be short because if it becomes long, maybe it will bore you guys. But the concept is there. I've just given you just a little concept. I believe during this week we can have more comprehensive lessons on Zoom, and you guys can be ready to ask any question of your choice, and I'll be there to answer everything. Thank you.